please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Halftime Report. Well, it's 12 noon. We're halfway through the trading session. It's a good time to run you through what's going on. Not a great day really for the bulls. It's a Friday, but all the frontline indices virtually at the low point of the day. Hi, Rima.
Hi, I'm watching for ITC because that seems to have slipped a bit ahead of that GST meeting. So let's get the intraday up of ITC on your screen. It's lost nearly 2.5% from the top of the day. So that's been a stock which is under pressure. We'll focus on the GST meeting. That perhaps would have started. We'll get the outcome by 1:32 thereabout. Quick run through then of what's happening in the markets. As we pointed out, we are at the day's low. We had a gap down opening, but we progressively lost ground from the top of the day. A couple of losers include Pharma. That's breached its 200-day moving average in today's trade. It's a cut of about 2.5%. Weakness seen in Infosys, ITC, a couple of private sector banks like Axis and Yes Bank under pressure as well. But let's drill it down to individual stocks and get some more detail on L&T Finance. That's on top of our movers and shakers list. Abhishek joins in. Abhishek?
Well, it has been a very strong quarter, Rima, for L&T Finance, especially if you look at the AUM growth. Just two key numbers that I'll run through. The net profit was at 409 crore versus RPOL of 370 crore. Their asset quality improved by 70 basis points on a sequential basis. So gross NPA came down to 4.8 versus about 5.5%. Look at the AUM growth. Now, last year, Q3 FY17, the loan growth was at 10.4%. From there, it has now moved up to about 25.5%. Largely driven by rural and the housing portfolio that the company has been focusing on. The company raised a capital of about 3,000 crore in Q4. However, despite that, the focused business ROE just fell by 20 basis points to 16.7 versus 16.9% in the previous quarter. Defocused business, which they have been scaling down, now contributes to less than 2% of the overall AUM, and in absolute wise, it is at 1,540 crores. Let's listen into what the management has to say about the growth prospects.
Matter of corporate policy, when do we actually choose to take that write-off? It will be P&L neutral because we would have already provided for majority of it. Let's say it will become less than 1,000 crores this year and then maybe completely disappear by FY20. The way NIMs will vary is based on the way I will be able to pass it on and also my ALM management, right? We have managed our ALM quite well. Our economists saw this increase coming 2 quarters in advance, and we moved quite a bit of our treasury from CPs to NCDs. So today we are placed well that we have a positive gap on our balance sheet. Higher percentages of our assets are repriceable more than the liabilities. So we are today in an advantageous position because we have a positive gap. NIMs will certainly go up and down. We will try to manage it our best, but using fees as the second source of income has been the strategy for the last 2 years, and I'm glad to report that in FY18 our NIMs plus fees is the ratio I always talk about, has improved from 6.5% in FY17 to about 6.9% in FY18. Our endeavor will be to keep it that 6.7 to 7% range throughout despite the cycles, and if you are able to do that, profitability will be safe.
Mid-cap IT is not doing well in today's trading session. In fact, Hexaware is down more than 10%. Rima, what are brokerages saying?
Well, it's 9 days up and 1 day down for mid-cap IT. That's been the extent of rally, but that seems to be the principal concern. One, the run-up has been too much. Secondly, on account of that, the valuations are very high, and therefore there is no room for disappointment. So Kotak has downgraded the stock to a sell from a reduced rating. It's a 23% rally in the last 3 months. They're surprised that the guidance has not been changed on revenues from the current 10 to 12% given the Q1 beat, but that they say the management could be conservative, and the stock is expensive at 21 times calendar year 19 PE. Nomura also retains a reduced rating. They expect a combination of these factors, the run-up in the price, lack of a guidance upgrade, moderation in the company's margins, full valuations, all these factors will put pressure on the stock. Morgan Stanley also continues to maintain an underweight rating on Hexaware. They're saying that the stock is already pricing in a potential upside risk. The risk reward is unfavorable, and given valuations are at 20 times PE, there is very little room for disappointment. And this time, there was some disappointment in the form of margins and the fact that the management did not up their revenue guidance.
All right, Rima, thanks so much for that. Well, beaten down stocks like HCC that are down nearly around 20% for this week. They've recovered in trade on high volumes. Here's a word coming in from the management on their Q4 earnings, as well as plans to reduce debt.
Our debt is reduced to about 3,270.
Okay, and you said that you expect significant...
Of which about 1,400 crores is working capital.
Right.
So that's not a debt.
Right.
So that leaves us with about 2,300 crores or so that we have to pay back.
How do you see that reducing in the coming financial year?
Because I have to get money from government, I hesitate to give. But we should be able to reduce it.
To what point, if you could?
I would like to bring it down to zero, but let's say over the next 18 months or so, we should be able to clear this debt. 2 or 3 big investors have shown interest in wanting to invest with Lavasa.
Right.
And we are now under discussion to find a resolution.
As far as getting into the nitty-gritties of this audit report is concerned, one point which they've said is that the liabilities of the Lavasa subsidiary exceed the assets by over 2,300 crore.
Well,
that's a substantial amount, sir.
No, I'm sorry. I don't entirely agree with that issue. For the simple reason, the valuation of Lavata land that you own is anybody's conjecture.
Right.
If you go by the ready reckoner that charges the stamp duty, then this does not hold true.
Right. My question here is slightly different. My question is, if in any situation the debt recast plan does not materialize, let's assume it, then in that case, would filing for bankruptcy be the only option or the option which you would consider for Lavasa?
I don't know who will file for. We are not going to file for bankruptcy.
Okay, not looking to file for bankruptcy for Lavasa. Moving on, the Castrol stock is under pressure after Q1 earnings failed to impress. We spoke to Omer Dorman, the MD of the company, who believes they will invest heavily in the advertising spends going ahead. Listen in.
In the first quarter, we've taken a number of initiatives in terms of new product launches, whether it's Castrol Magnatec, Castrol Turbomax, Castrol CRB Turbomax. We've launched into the market. And for the first time in the history of Castrol, we're going to have a significant investment, advertising spend behind these 3 products. At quarter versus last quarter, it's a 20% increase. So it's a significant increase, and we will continue spending and investing behind brands like we did consistently.
Well, JSW Energy is lowered in trade. Anisha joins us to give us her analysis of the numbers and what are brokerages making of it. Anisha.
Thank you, Nigel, for that. Well, yes, the numbers were unimpressive. Even if you look at the top line, came in below our expectations. The margins were lower given the fact that the fuel cost for the company went up. But the real disappointment was on the bottom line front, wherein they reported a loss over 500 crores versus an expectation of a profit. Well, of course, there's a bit of provision that they made on account of the deal and the advance that they had given to Jaiprakash Power Ventures. But even if you strip that off, the company has reported an adjusted loss of close to 40 crores versus expectation of the profit, and the reaction is really seen on the stock. Other than that, if you look at the average realization, that is also down about 11%. We have been seeing the merchant prices go up, but that is not working out for as far as JSW Energy is concerned. Now, Deutsche Bank, for example, calls Q4 a miss. They have cut their EPS estimates for FY19 by 14% and for FY20 by around 3%. They, however, maintain a hold on the stock, given they say that the valuation is fair. Macquarie is a bit more disappointed because they say that they're concerned with the high capital commitment of the company, because remember, now they have changed their plan when it comes to the EV. Now they're looking to roll out the trucks first and then the passenger vehicles, raising the capital requirement for this particular project to 6,500 crores versus 4,000 crores, and that is also spooking the investors a bit, given the company does not have too much experience in that field. Macquarie also says that the consensus estimates might see further downgrades, so let's see whether we see that or not, but as of now the stock is coming under a bit of pressure.
Okay, thank you very much for that. Godrej Property numbers on your screen. At least on the bottom line, there is a significant jump. 141 crore versus 62 crore that the company has reported. So that is more than doubled.
Actually, we're watching out for their other income, and that, Rima, is what is flashing on the screen. 327 crores. I think we were looking out for the 50% stake that they had sold in one of their properties. I think it's Godrej 2. So on the back of that, we're seeing that big fillip in terms of another income. It's come in higher by nearly around 10 times. And that's why it's drifting the entire profit number so much higher, even on a year-on-year basis. Otherwise, we have an estimate that came in from Morgan Stanley. They were working with a number of around 53 crores odd. In terms of the top line, I didn't have a look at that. Rima,
I think it's come in 521 crore, so which would compare with 431 crore. So that would be a growth of what, 21% in the company's top line. We've not calculated the margins, but if I purely look at the profit before share of profit in joint venture and tax, they're also showing an improvement, 175 versus 68 crore. But we'll wait for the margin figure. So revenues, 20% growth. Bottom line is up 127%, but that is boosted by a higher other income on account of the company selling its stake in one of the properties. More on Godrej Properties in a bit. Before that, Ekta, Sun Pharma?
Well, the stock is under pressure simply because of the kind of run-up that we saw in yesterday's trade on speculation that they had received approval for Nexium generic, which is basically a drug which is filed either out of Ranbaxy's portfolio, according to most analysts, and there was speculation that maybe it could be from the Halol facility. However, there is more clarity, and most of the analysts believe that it is either from one of the remediated Ranbaxy facilities that it was filed out of, or it is site transferred to Dadra, and that's where they received approval from. So hence you can see the stock correcting on the back of the speculation probably being put to rest.
Okay, all right. Thanks so much for that, Ekta. Well, Rima, Bharti Airtel was buzzing early morning in trade, but it's come off, I think, the top.
Yes, the news is that the company is looking to do an IPO for its African business. Now, this was already indicated by the company in the conference call that they're exploring the possibility of listing the African unit. But now reports suggest that the company is looking to sell about a 25% stake and raise $1.5 to $2 billion. They're looking at listing in early 2019, they're looking at listing it on the London Stock Exchange. So this is what reports had suggested, and even our company sources seem to confirm that it could be early 2019 in terms of a listing. Now, it's probably a right time to do it in terms of listing Africa, because FY18 was the first full year that the company managed to report a profit for the African business, and a good 8 years after entering it. They entered it in 2010, but only finally managed to report a profit for the African business last year. So things are improving, and the company is looking to capitalize on it to build its war chest.
Okay, all right, Rima, thanks so much for that. Well, you know, those are all the stocks that we just covered, but let's focus on the other big frontline now, Vedanta. The fourth quarter earnings were pretty good. In fact, the aluminum business did well, the power business as well did well. We have with us Mr. Kuldeep Kaura, the CEO of the company, who joins us. Well, congratulations, sir. It's been a good showing in FY18. What are the production targets, though, you have set for FY19? And also importantly, the aluminum business has been doing well. I wanted to understand, how are you going to reduce your cost of production there by nearly around $200 on a per ton basis?
We are pleased with the results of FY18, and going forward, we are really very excited that all our businesses are actually growing. Zinc business, which is one of our main businesses, main contributors. This year we produced about 1 million ton in Zinc India and about 200,000 tons in Zinc International. This business is on the way to become a 1.6 million ton business because both sites are growing. India to 1.2 and our Zinc International to 400,000. Similarly, your question was on aluminium. Aluminium, we had ramped up the volume in FY18, and there are some headwinds on the cost side. I mean, as you know, there's been some disturbance in the supply chain of alumina because of the sanctions imposed by US, and this has made the markets very volatile. But we are focusing on what is controllable costs and where we can make improvements. So 2-3 things will happen this year. One is our alumina refinery production will actually increase almost 50% from the previous year. From about 1 million ton, it will go to about 1.6 to 1.7 million ton. So we'll need to import less of alumina. And number two, our feed to this alumina refinery also will have local bauxite quantity which will increase with the supplies from Odisha bauxite, which is a high quality bauxite with the lower logistics costs, etc. So these two factors plus improvements in our power plant operations plus our better materializations of coal. So all these factors will contribute to about $150 per ton kind of a improvement in the cost. Plus, of course, if we are lucky, if the markets kind of turn favorable and coal auction prices come down or the alumina prices soften, so that will be the additional advantage.
Okay, we'll come back to Vedanta in just a bit. Godrej Properties is moving up, post the numbers now higher by 3.5%. Sonal, some more color?
Well, you know, the revenue is higher than what the Morgan Stanley estimates said, but profits, they are driven by the higher income that you were already talking about. That is coming at 327 crores versus 30 crores. But that was again because they had sold a stake in one of their properties to Godrej Fund. But the EBITDA that is coming, actually they have reported a loss this quarter, and that is because their other expenses are higher. That is coming at around 121 crores versus 49 crores last year. And also the cost of sales have gone up. But you know, in real estate companies, there are two things that we have to really talk about. One is the P&L and one is about the cash flows. So here the P&L looks really weak, and they release their presentation in a while after the results. So we'll have to really look out for what the collections this quarter have been. Pre-sales number, that is another thing, important thing that we have to watch out for. Last quarter the pre-sales looked really good. So we have to see what the pre-sales momentum this quarter looks like. Apart from that, the EBITDA loss is actually a shocker. That is not what we expected, but the stock is going up. So I need more details about the pre-sales and the collections so that we will be able to analyze this in a better manner. Till now, the results on the P&L front doesn't look so exciting.
Okay, you said the EBITDA loss is what? How much was the EBITDA loss?
The EBITDA loss that they're flashing is around 170 crores. So that is what we'll have to like flash it again. But there is an EBITDA loss that what we were not expecting this time around. That so we'll have to really find out, is it only because of the cost? That is what it looks like as of now. Yeah. But then apart from that, pre-sales and collections are two things that we really need to look out for.
Absolutely, Sonal. For real estate companies, we'll have to look at the cash flows. We look at the pre-sales. That's going to be important. You know, it's not the normal way that we look at these numbers. So the street is telling you that. You know, otherwise, in EBITDA loss, the stock should have been under pressure. But clearly, the street is factoring in something in terms of what were those pre-sales numbers and whether or not they were better than the last quarter. So we'll keep an eye out on that. The minute that presentation is uploaded, we'll have Sonal with us to run us through those details. But